Good morning, everyone. Welcome back to Capital Markets Quickie. Today is the 1st of September, and you know the saying, sell in May and go away, but remember to come back in September. Well, here we are. I hope everyone remembered. However, today we're going to take a quick look at the August performance of the different indices. I'm your host, Endrit Sella, and let's get started. By the way, if you want a visual of the performance table that I'll be talking about, you can go ahead and subscribe to my newsletter, Sella's Weekly Insights on LinkedIn. Let's start with Germany and its leading index, DAX 40, which so far is having a pretty good year. German stocks have been, as far as valuation is concerned, very attractive, and global investors were buying them up in the first quarter. That's why the DAX had most of its performance in the first quarter. However, the index is up 14.5% on the year, and August was, well, no surprise there, a weaker month. The DAX closed with minus 3%. Moving on to the S&P 500. Now, here we saw a slower first quarter. However, the index has picked up in the second and third quarter. Year to date, the S&P is up 17.4%, but August, here we see a similar picture, was also a little bit weaker. The index closed the month at minus 1.77%. And we see a similar picture as far as the NASDAQ is concerned. In August, the index closed at minus 1.6%. However, that is of little concern to the year's performance. The index is up 41.7% on the year, and a large part of that performance comes from companies such as, well, Apple, Microsoft, Nvidia, and so on. Now, let's turn our attention to the Chinese market, which was off to a great start in January. At one point, the Hang Seng, which is the index that we're looking at, was up almost 15%. We're talking about January. However, that ended quickly as China failed to impress with its reopening after the long restrictive COVID lockdowns. The Hang Seng index is down 7% on the year now, and most of that negative performance actually came in the month of August, which the index closed, unfortunately, at minus 8.45%, and that was mainly due to the disappointing macro numbers, which came out last week. And guys, I did a whole episode on that. You should definitely listen to it. Now, let's move away from the indices and take a look at crude oil, the dollar, gold, and Bitcoin. Let's start off with crude oil, which does play an important role as far as inflation is concerned. At one point this year, oil was down more than 15%, and we saw a big turnaround. Currently, the price is, well, standing at nearly 87 US dollars per barrel. In August, the price changed, however, by only 1.52%. Now, let's talk about the US dollar compared to euro. Relatively speaking, we've seen the dollar lose some of the strength it gained last year. At one point, we're talking about last year, euro dollar reached parity, so basically 1-to-1. But now we're back to around $1.08 per euro. In August, we did, however, see the dollar gain some of its strength back, because at one point we were at $1.1 per euro, and the euro lost 1.83% to the dollar in August. So what about gold? Well, I wouldn't say that it's really shining as far as performance is concerned. However, gold is up 6.3% this year, and it did lose 1.3% in August. Now, you should know that in times where interest rates are quite high, as is the case in the United States, then gold is less attractive or less of an alternative, because fixed income seems to be a safer haven for most investors. And now let's move on to the digital gold, if you will. Of course, I'm talking about Bitcoin. Now, let me just say this. I'm not a crypto expert or a fan for that matter, but I do look at the performance every week. In August, Bitcoin lost a whopping 11%. However, on the year, the coin of bits is up 56%, which, well, is still a very, very long way from its all-time highs of around, well, above 63,000. All right, folks, that's all for today's Capital Markets Quickie. For most of the indices, the month of August stayed true to its nature of being a slower month. And now that we've entered September, let's wait and see what the consensus is going to be. Let's cross our fingers for optimism. Have a great weekend, everyone. I'll be back on Monday with a brand new episode of Capital Markets Quickie. Cheerio!